Russia's economy is on a turbulent ride, facing challenges that are reshaping its financial and social landscape. The once booming energy giant, heavily reliant on its vast reserves of oil and natural gas, is grappling with the consequences of its actions on the global stage. Energy exports, once a cornerstone of its economy, are now under intense scrutiny and restrictions. The invasion of Ukraine triggered a wave of sanctions from Western nations, shaking the foundations of Russia's economic stability. These sanctions have targeted key sectors including finance, technology, and energy, aiming to isolate Russia from the global economy. These sanctions, coupled with internal structural issues, have created a perfect storm of economic challenges for the country. The ripple effects are being felt far and wide, with industries struggling to adapt to the new reality. The impact is being felt across all sectors, from energy to finance and consumer goods. Supply chain disruptions and reduced foreign investments have further exacerbated the situation, leaving businesses and consumers in a precarious position. The ruble, Russia's currency, has taken a tumble, losing significant value against major currencies like the US dollar and the euro. This devaluation has made imports more expensive, further straining the economy. Businesses are struggling to cope with rising costs, dwindling investment, and uncertain market conditions. Many small enterprises are on the brink of closure, while larger corporations are scaling back operations. The Russian people are facing the brunt of this economic turmoil, with rising inflation eroding their purchasing power and creating uncertainty about the future. Everyday essentials are becoming harder to afford, and the middle class is shrinking under the weight of these pressures. This is not the first time Russia has faced economic adversity. The nation has weathered storms before, each leaving a lasting impact on its people and policies. The collapse of the Soviet Union, a period marked by widespread poverty and uncertainty, the 1998 financial crisis, which saw the ruble plummet and banks fail, and the 2014 annexation of Crimea, which led to initial sanctions and economic isolation, all brought their own set of challenges. Each crisis tested the resilience of the Russian economy and its people. However, the current crisis is unique in its complexity and the severity of the sanctions imposed. The global interconnectedness of today's economy has amplified the challenges, making recovery an uphill battle. The world is watching closely to see how Russia navigates this treacherous economic terrain and emerges from the other side. Will it adapt and innovate, or will it succumb to the mounting pressures? Only time will tell. Inflation, the silent thief of economic stability, is not just a statistic or a distant economic term. It is a force that directly impacts the lives of ordinary people, reshaping their daily realities. In Russia, this silent thief is wreaking havoc on the economy, leaving a trail of financial strain and uncertainty in its wake. It's a simple concept with devastating consequences. Prices of goods and services increase, and the purchasing power of the ruble diminishes. This means that the same amount of money buys less than it did before, forcing families to make difficult choices. Imagine going to the grocery store and finding your usual basket of goods costs significantly more than it did just a few months ago. For many, this is not just an inconvenience but a harsh reality that disrupts their ability to afford even basic necessities. This is the reality for millions of Russians today, as they navigate a landscape of rising costs and shrinking budgets. Official figures from the Russian government put inflation at a staggering over 15%, a number that already paints a grim picture. However, many economists believe the actual number is much higher, suggesting that the true scale of the crisis may be even more severe than reported. This discrepancy highlights the challenge of obtaining accurate economic data in a country facing significant sanctions, where information control and political narratives often take precedence over transparency. The impact of high inflation is far-reaching, touching every corner of society. It is not just about numbers, it is about the erosion of financial security and stability. It erodes the value of savings, making it harder for families to plan for the future or invest in their children's education and well-being. Businesses, too, are not spared. They face squeezed profit margins as they grapple with rising input costs, which threaten their survival in an already challenging economic environment. Many struggle to pass those increases on to consumers, who are already burdened by a cost-of-living crisis, leading to a vicious cycle of reduced spending and economic stagnation. This toxic combination of factors creates a climate of uncertainty, where both consumers and businesses are hesitant to spend or invest. It undermines consumer and investor confidence, further hampering economic growth and leaving the nation grappling with an uncertain future. In a bid to combat soaring inflation, the Central Bank of Russia has resorted to a familiar tool, raising interest rates. While this measure can help curb inflation by making borrowing more expensive and encouraging saving, it also comes with a cost. Higher interest rates act as a brake on economic activity, making it more expensive for businesses to invest and expand. The central bank faces a delicate balancing act. Raising interest rates too aggressively could push the economy into a recession, while keeping them too low risks fueling the inflationary fire. This balancing act becomes even more precarious in the face of external pressures like sanctions, which limit the central bank's ability to manage the economy effectively. The impact of high interest rates is already being felt by businesses and consumers alike. Loans for cars, homes, and business investments have become more expensive, dampening demand and slowing economic growth. This slowdown is reflected in key economic indicators, such as GDP growth, which has contracted significantly since the onset of the current crisis. The Russian ruble has been on a roller coaster ride since the invasion of Ukraine, reflecting the broader economic turbulence the country has faced. After an initial sharp decline in value, the currency experienced a period of artificial stability, largely due to strict capital controls imposed by the central bank. These measures included limiting foreign currency transactions and mandating exporters to convert their earnings into rubles, temporarily propping up the currency. However, the ruble's underlying weakness persists, and its depreciation has significant implications for the Russian economy, particularly when it comes to imports. The currency's instability has made it harder for businesses to plan ahead, adding to the economic strain. Russia relies heavily on imports for a wide range of goods, from machinery and technology to consumer goods and even certain food items. This dependency has left the economy vulnerable to fluctuations in the ruble's value, as many of these goods are essential for both businesses and households. A weaker ruble makes these imports more expensive, further fueling inflation and putting pressure on businesses and consumers. For small businesses, this often means passing on the increased costs to customers, which can lead to reduced demand and lower sales. This is particularly challenging for industries that rely heavily on imported components or raw materials, as their production costs are directly impacted by fluctuations in the ruble's value. Sectors like manufacturing and technology are especially vulnerable, as they often depend on specialized equipment and materials sourced from abroad. The depreciation of the ruble also has implications for Russian consumers. Everyday items, especially those that are imported, have seen sharp price increases, making it harder for families to afford basic necessities. Imported goods, from electronics and clothing to cars and luxury items, have become significantly more expensive, impacting living standards and consumer choices. Many consumers are now opting for cheaper, locally produced alternatives, though these are not always available or of comparable quality. This situation is further exacerbated by the overall economic uncertainty and rising cost of living, leading many Russians to tighten their belts and reduce discretionary spending. The long-term effects of this economic strain are yet to be fully realized, but they are likely to reshape consumer behavior and the broader economic landscape in Russia.